Welcome back for my daily report market analysis videos with me, Richard Perry, market analyst at Hantec on Thursday the 23rd of January. Looking at dollar yen. Now, in recent days we've been discussing whether the fact this consolidation was actually going to kick in and then subsequently retrace. Now it seems as though that has now kicked off. We had a strong bear candle on Tuesday. Intraday yesterday we had a rebound. Now that rebound, when I was discussing the morning report video, was actually up around that 110 figure mark, so it looked as though that it was holding that consolidation and actually still fairly okay, but there was a sell-off into the close, and that sell-off has continued today. The coronavirus in China seems to certainly have impacted negatively on risk appetite, and that's driven yen strength. That yen strength is now below 109.70. If that is seen on a closing basis, that would constitute a near-term breakdown. I'll show you here on the hourly chart. Little top pattern here, around about 50 pips worth of top pattern, so not the biggest top in the world, but that would imply around about the 109.20 mark, and ultimately we could see a move back towards the old pivot around 109 figure having been previously a basis where the market was seen as a turning point throughout sort of the latter stages of 2019 and could potentially now again take hold in 2020. However, this little top pattern is certainly part of this usual playbook that we see through dollar yen, where you see the breakouts, consolidating before selling back, retracing, breakout, retracing, breakout. Actually, you didn't get a breakout back in December, but still moved back to resistance, retracing sharply. But we did get a breakout, and then subsequently we have retraced. So I think 109 figure area is probably a fairly reasonable ballpark for a retracement to fall back into, and what you can now see is these momentum indicators starting to take note of this move. You've got a bear cross on stochastics, not yet confirmed as a sell signal, but the MACD lines are also close to a bear cross. RSI, if that goes below 50, then that again would add into the whole sort of corrective outlook on the near-term basis. Now, ultimately, I wouldn't be saying that the yen is going to be gaining significant ground, and I don't think this is going to be going much beyond the 109 figure mark. But ultimately, what you'd be looking at then is the next positioning would be using weakness as a chance probably to buy again, and it's just then you've got to time it, and you start to think about, well, 55-day moving average, which was a fairly decent gauge until sort of early Jan. 55-day moving average around 109.14 area. So that is effectively the target, the little top pattern. So I think that that is a potential target area. Initial support 109.40 area. Little reaction low here, but not decisive. But you can see here on the hourly chart, 60 now seems to be sort of an area where the RSI starts to falter over. So even if you do get a technical rally back towards 109.70, that seems to be a resistance area of overhead supply on a near-term basis, and I think that could be a selling opportunity. But certainly it looks like we're turning corrective on dollar yen now. So I wish you good luck in your trading. Click here to subscribe to our analysis videos and go to our website to sign up for our webinars.